Webcast is now starting. All attendees are in listen-only mode.
Hi everyone, Ron here at AbleTrend. Welcome to the webinar. We'll take a look at the signals from today. I'll show you what you want to be looking for on your chart when we get the triple confirmation, when we get the two time frames in agreement. And we keep it simple. We're just looking for the cross or the X and the color of the bar to be the same color. You know, when the first time they come together, that's the lowest risk, best time to trade. So we'll take a look at a swing trading chart here, XLF. This is the financial index, and the banks have really taken off the last 4 days now. The Nasdaq's and some of the other markets have cooled off just a little bit. They've been on fire for 2 months. And in fact, the last 2 months was the best 2 months in the history of the market. So pretty amazing and powerful uptrend. But you can see here, this is the banking index, and I noticed here when I kind of got the signal. Well, technically the signal come in right here, but that's now. Some people, and I kind of agree to use the high. In other words, give room for your stops. Being that the market's in such an uptrend, give a little more room for your stops. Nothing wrong with using the daily support points for your stops when you're in such a powerful uptrend. I mean, that's what I do, and I think that really works well. I can't tell anybody else what to do because so many people they just can't handle any risk. The problem is it kind of hurts more than helps sometimes. You have to give it room to breathe. Again, only because we're in such a strong uptrend. On the short signals, absolutely, we're going to put our stop second higher row of small red dots. Normally, we'd put our stop second lower row of blue dots. But this is a longer term trade. This is not a day trading chart. That's totally different. This is a longer term where you're holding, swing trading chart. You're holding it for a few days or maybe even a few weeks, and up and away it goes. However, if you did, get stopped out here, you still made a little bit of money because technically that's where the stop would go, and you're right back in on the sweet spot. I mean, just a perfect sweet spot right there. So boom, up it goes. This thing's chugging off nicely. So just wanted to bring that up. The banking index and the banking stocks have really taken off the last week. Last 4 days, actually. This is a daily weekly FPXI, just another ETF that I follow. And, the buy signal came in. Well, just look for the cross first and then the next blue bar. So there we go. And that was back at 39, and you're up at 46 here now. And again, anytime the prices pull back to support, I mean, these are great places to enter the trades. If nobody's going to catch every single penny out of all of these trades and grab the bottom and get out at the top. I mean, that's just not going to happen. Nobody expects that. Even in the intraday charts, I mean, you're not going to get every single dime out of the chart. I mean, the software has no emotion, and it just goes in and out smoothly. It's gonna you have to be quick, especially on the intraday, to make the trades because the markets are moving fast, and you got to be quick. Otherwise, you're just going to get in a lot of them late, which happens, and it's okay. I mean, there's slippage, there's commissions, so not going to get every single dime out of the indicator. However, pullbacks, especially on longer term charts, on stocks and ETFs, when you're doing swing or position trading, I mean, those pullbacks back to support, I mean, they are just a home run, especially with the S&P being in such a strong uptrend. Those are got to take advantage of those in longer term retirement accounts, that type of thing, or just long term trades. This is your E-mini Nasdaq, which I show every week, twice a week. because it's our favorite to trade. But the Russell's been very good lately. That's another good one. Of course, the mini S&P is perfectly fine, as well as crude and any other markets that you like to trade. The software doesn't care. It's just that the Nasdaq and the Russell tend to be a little smoother in general. They just tend to be a little smoother. I just put a little 15-minute chart up on the side here also, just a chart that I like to take a look at. Of course, you've got your 3-9, your tick chart for sweet spots, and the obvious, the 1-3 chart. You can also use the 1-2-3. Nothing wrong with that. I've actually been working on an indicator. This is very interesting. Because I find it super interesting. I just put literally hundreds of hours in. Nights, weekends, whenever, and I'm always looking to make it better, as everybody who's been here for a few years knows that. And that's why it does get better every year. And I've been playing around with a little extra indicator on the chart, tweaking the settings, because you just can't put a standard chart up. And adding into it for some added confirmation to filter out some false signals, some losing trades. The software works fantastic when it's trending. Everybody knows that. But when it's sideways and choppy, like every trader in the world, you can't win. Fortunately, we have the no trade zones, like right there, which filtered out a lot of choppiness there, as well as 3 or 4 times today also. Just going to make it full screen. And the purpose or the good part of AbleTrend is that you've got these no trade zones. It's exclusive to AbleTrend in our algorithms. That's why we put the 2 time frames in one chart. That's what makes it so good. But I want to make it even better. I'm always looking to make it better. I never stop. I might not add anything or subtract anything or something, for months at a time, but doesn't mean I'm not looking into it, because we're all in it together. So, I'm always trying to make it better for everybody. It's just the right way to do it. And I've just been playing around with another indicator. About 2 weeks, I expect. If it continues to work well, I'm encouraged by the results so far. In about 2 weeks, I'm going to hopefully introduce that, especially when the contract changes over to the September contract. So we'll see what happens. I'm just encouraged by that. If it fizzles out, it's fine, but I'm not going to, we have thousands and thousands of clients who collectively trade millions of dollars. So I'm very low risk. I'm very careful to at least test it, and retest it and research it until I feel that it really makes a difference. And I feel in my mind, if we can eliminate one losing trade a day, one potential losing trade a day, let's just assume that's about $100, okay? Just keep it simple. If we can, that $100 a day that we don't lose, which in essence means we're making because we're not losing it, that's $500 a week. That's $2,000 a month. If it's just one a day, I can eliminate that by adding, something to the chart or doing something better, tweaking a setting or something. One a day is that's my goal. That's a home run, because that's a lot of money. At the end of the week, the end of the month, and then the end of the year, it really adds up to some serious money. So again, I'm looking at it, and like what I see so far, but a couple more weeks of testing. And if it doesn't work, well, that's okay too. But won't mean I'm not always going to continue to try. Beautiful uptrend at the open today. Triple confirmation. Just clear cut, nothing to think about, real obvious for a serious, disciplined AbleTrend trader, going by our simple trading rules, the same rules I've been talking about for years. So we keep it very consistent, not cherry picking. And that was just just perfect. Triple confirmation, a couple of minutes after the open, and perfectly fine to wait a couple of minutes also after the open, because the markets can be very volatile. You get a flood of volume. You're always going to get longer price bars because there's so much volume and so much volatility coming in the first few minutes. So you got to allow for that. Notice how it just bounces right off of support. It was just textbook perfect here. For scalpers, the best way to scalp is right at the support dots. But that's just a specialized kind of thing if you're just looking for a couple of points and going to load up on contracts. However, this was just as good as it gets. I mean, triple confirmation, perfect, everything agreed, just up and away it went right from there. So now we're going to put that stop just a tick or two below that small blue dot. Always best to put it below the dots, meaning give it a little extra room. That's always the best place to put it. Sometimes you have to, if the bar is really long or pops away from the blue dots, you'd have to put it a little under the lower, a little under the bottom of the first blue bar. But I mean, this blue bar is almost touching that support dot, so that's just a perfect place. And again, perfect. If you missed that first one or you just wanted to wait a couple of minutes, I totally get that. I agree with that. Could have got in on this blue bar, on that one. The price didn't move yet. That's the point. It was still basically at the same spot. So anywhere in here, the first 7 or 8 minutes was a great place to get in and just took off like a rocket. There's your two. Oh, as the dots are going higher, we're putting the stop at the second lower level of dots. So when the price is up here, there's support. The support dot, second lower level is down here. Now you say, okay, wait a minute, I'm in at 90. My stop's at 05, which is great. I'm making 15 points. But geez, the price is way up here. I've got my stop 30 points below the price. I don't want to give back such a big move like that. So when blue bars, don't even think about getting out. You're just shorting yourself out of making more money. But now when the bars turn green and they get 2 in a row, that's our signal. It's getting a little weak. Doesn't mean it can't keep going up. But when we see 2 in a row, and I got such a huge profit on this trade, we're going to get that stop 2 points below the bottom of the green bar, the lower of the 2. And we get a bonus. It keeps on going higher, but then it shoots back really quick, and we're stopped out, would be right there. So we're out of 25, we're in at 90. I mean, that was a major home run. That's 35 points. So let's just call it 30. Just heading for, because I like to downplay the winners. That's a serious start to the day. 30 points times $20 per 1 point per one lot. It's a nice start for the day. Losing trade right here, and we're going to get ticked out because it goes clearly under the blue dot right there. I'd have to check the tick chart on this one and see if the tick got us back in at that point. And this is right around 10:30 Eastern. I didn't think it did when I was looking at it. Yeah, actually it did. Okay, so we'd be back right in here on the sweet spot. Tick chart says it's okay to get in, and we're going to lose again because it clearly gets stopped out right there. There's the second lower row of blue dots. So we pick up 30 on the first trade, but we're going to give back about 10 on these two, and so we're up 20 to 25, but I always say a little less, 20. So we're up 20, and if we're looking at this live, only the first sweet spot counts. I know there's another one here, not interested. Only the first sweet spot. Sometimes they work out more than one, but most times they don't. So only the first sweet spot, which is of course, a blue bar after the prices touch the blue dot. So now we're looking for a reversal only. There it is. There's the cross. There's the 3 minute. There's the 1 minute, and let's just call it the next red bar, because that one closes just slightly under that support point there. So right there at the open of the next bar, which is right there, there's the triple confirmation bar. The open of the next one, we're short. So we're short at 13. Looking good. Well, going sideways, but still below the red dots. So what I'm looking for is I'm just watching those dots. I just want to make sure the prices stay below the hidden resistance point that AbleTrend can see. So we're going to stay short. It's going sideways. Now we're going, well, who knows? Might not work out. Now you see 2 green bars. Don't even think about using that. We only use the 2 green bar when we're in a really big profit. Going short, staying short, I should say. Let's see what happens. Ooh, I like that. It's breaking down. We got red bars starting head lower. There it is. There was no reason to get out. There's our two greens. You're not even making 10 points. We're only making 5 points in that. So I'm not going to use the two greens. The two greens is only is only good. That strategy is good when we're in a big profit and we want a little, we don't want to give back so much. Looking good. Home run. Now we just keep moving the stops lower. Remember, the stops go previous higher, small red dots. And this was a home run. Boy, was this a home run too. There's our two greens. We got a huge profit here. And we're ticked out right there. 2 points above. Doesn't look like much, but we did get ticked out over there at 65. We got in at 13. I mean, that's 50. That's a little more, but it's 50. That's 50 points. Let's just call it 45. Because nobody's going to nail this exactly perfect. I mean, now we're looking at some real money here. We're up 20 going into it. Ed plus 45. Let's just even say 40. I'll take another $100 off just for the heck of it. I mean, we're looking at some really, really nice, profits here this morning. And we weren't even 2 hours into the trading day. The suffering killed them. So it's a heck of a start. I mean, 60 points times $20 a point, and I lowered that number a little. I mean, that's 1,200 for serious trader here now. Anybody just following the signals? I mean, you got to keep your emotions out of it. That's the key to it at all. And believe me, I know the feeling. Okay, obvious no trade zones here, losing trades here. What was nice about this, and we'll see if it works out in the future, but what I was working on that I mentioned earlier, that lecture indicator eliminated these two losing trades. I was really encouraged by that. But they were losing trades today. So there's a no trade zone. No way you can get on that bar. I mean, that's a 25-point bar. And look how far it is from the red dot. Remember the little close. The further the prices, which you probably can see by now, it's so obvious, but I'll say it anyhow, the further the prices get under the red dot, the greater the chance it's going to eventually pull back. The greater the further the prices get above the blue dots, in this case, 5 minutes later, pull right back to it. So we're going to go short any one of these, bars really would have been okay. That's a sweet spot right here because it hit the red dot, and I love the sweet spots, especially whenever the 3-9, everything all agrees. So we're going to go short. Any one of these red bars would have been fine to go short. Why? The price didn't go down yet, and every one of them had triple confirmation. So if you missed the beginning there, now the bars are shortening up, the dots are getting closer. It's a low risk trade the closer you are to the small red or blue dots. And that one was just about a break-even trade because we're clearly out on that right there on the red blue bar, blue dot. Now we're going to go long on this triple confirmation trade, and we're above the red. Even if it's flashing, we're above resistance because clearly there was very strong resistance there for about a half an hour. But now we've got our 3-minute buy signal comes in. That's the blue cross. The 3-minute buy signal comes in right there. The bar clearly closes above the red cross. The open of the next bar, we're long. So now we're up 60? No, the losing trades there. So we're up about 50 points going into this, just $1,000 per contract going into this trade. That worked out pretty nice. However, it was optional because it was during what we called the dead zone between 12:30 and 1:30. So the software gave us about a 6 or 7 point winner. I'm not even going to count it because it's the dead zone. And that's optional. Some days it works out. A lot of days it doesn't. Between 12:30 and 1:30 Eastern, the markets get very sideways. So we're not even going to count that. We won't even count this winning trade here. moving along, obvious no trade zone, obvious short trade, triple confirmation. And if you didn't get in on the first red bar, you had plenty of chances here, here. Again, why? The price didn't really move much then. You're still at the same price from the original sell signal, the original triple confirmation sell signal that came in here. So you had 7 or 8 minutes, or 6 or 7 minutes there to, basically hit the sell button, sell short button, and that one worked out well. Now the stop at this point is there, second higher row of red dots when the price is down in this area. We went short here at 34. There's 2 greens. Stop goes 1 point above. Very next bar, we're stopped out at 14. We shorted it at 30, 34. That's another 20 points on top of, already a pretty fantastic day. Again, nobody's going to get it perfect because it's very difficult. It's moving fast. But if you got, 80% of this, 70%, 3/4 of it, you're talking still big money per one contract. Kept on going lower, but this is not a close enough sweet spot. It's like 2-3 points away here from the dot. That's just a little, I wish it was touching the dot because then we would have a valid sweet spot there. And again, it doesn't have to touch it, but even if it's 1 point away, that's okay. This was like 2 points away. So that was a hard, some people might have had it, some people didn't. I'm not gonna count it because I like to make the trade, I like to make the trading worse than what it is. Under promise and over deliver. That's my thing. Obvious no trade zone kept us out of this choppy mess here when anybody who doesn't have AbleTrend would have clearly been chopped up to death. We didn't trade. We were sitting on the sidelines, just chilling out, waiting for the next trade. This was right at the end of the day, and that's just a 30-point price bar. No way you can touch it. Day over. Great day. Big winning day. I'm done. I couldn't care less at that point. Pretty cool stuff. You just have to be very disciplined, very serious, and take all the trades. The average is 10 a day, some days less. That's the only way to be consistent day after day after day. And again, I repeat, probably 5 times, I say it every webinar, there will definitely be losing trades and losing days, but very, very few losing weeks in an entire year. Very few. Let me just go through a couple of quick questions. Soleil, I only get in on the first sweet spot. Does that apply for swing trading too? No, for swing trading, it's a longer term trade. You can get in on additional swing spots, sweet spots. The first one is usually the best one. And when I say the first one, I mean the first one of that trend, not the first one of the day, the first one of that trend. When that first after the triple confirmation trade comes in, only the first sweet spot you want to take. Michael, how do you react if you feel the signal comes in too late or the move is already done? Well, if it's too late, then you missed it. You don't want to go chasing after it. Then you got to wait for a sweet spot. You got to wait for a pullback. If you can get a pullback back to the dots, that's when you can get in, Michael. Nick, can you go over the guidelines for trading the Russell? Everything's the same, my friend. Everything's the same. Nothing changes no matter what day intraday market you trade. As far as your 2 green bars, you're going to use like 30 or 40 cents above or below. 30 cents, 40 cents above, whatever you're comfortable with. It's basically the same thing. But otherwise, everything else stays the same. Michael, again, have I been trading for so long? I've not been on. It always feels the move is already done. I don't, that part, you have to make the trade, Michael. That part we can't, the software can't make the trade for you. You have to make the trade. When you see the trade, and I went over it with you, I went over it here just like you were looking at this live. If you see this right here, you're in. Right there. Triple confirmation, you're in. There's the first red cross. You're looking for the crosses. Look for the X's. When you get the red X at the close of the next red bar, you're in. If you missed it, well, you still had another chance, and another chance, and another chance, and another chance. I don't know how much, I don't know what more we can make. I don't know what more anybody could realistically, hope for. And you got to have your stop much further away than 5 or 7 points. That's way too tight. You'll never win. That's probably why you're having trouble. Your stop is way too tight. The worst thing you can do, or a guaranteed way to lose all the time, is to have too close of a stop loss. Yes, Stephen, 200, 400 on the tick. Surley again, 1045. You put the stop above the red dot. When I enter the trade, the rule is not to put the stop 2 points above. It's always above the dots if you can do that. It's always above the dots. If you feel it's too far away, then put it 2 points above the top of the bar. But if the dot is close enough, extend it a little further and go above the dot. You've probably seen 100 times where the price goes right up to these red dots and they stop. So if you can put it a little bit above the dot, perfect. If you feel it's a little too far for you, then just put it a little bit above, then put it 2 points above the top of the red bar. Either way, you were still a winner. If you put it at the top of the triple confirmation bar, you were still a winner right here. So it just depends on how far the price is from the dot. In other words, if the dot is 20 points away, 15 points away, then use the top of the red bar or the bottom of the blue bar if we're going long. That's all. Keep it simple. Ashok says, "Thanks, Ron, for what you do for us. Any quick preview on how you avoid the losing trades?" That's what I've been talking about for 27 minutes. Just follow the rules. If you're looking for a perfect system, of course that doesn't exist. But if you follow the rules, your losses will be small and your winners will be big, just like today's day. I mean, it was a huge winning day again today, and it's just been a pretty fantastic year. But yeah, there's no way to avoid every losing trade, obviously. But if you just keep it simple and follow the simple rules we go by, put your stops in place, you'll have there's no reason. I mean, these signals never change. So, I mean, this would have been your trading day, just like anybody else. Stephen K, excellent day. Well done, my friend. 81 points today total. 5 losing trades, 6 which averaged 7 points, but 6 winning trades that averaged 19.5 points. That's the key to trading. Many days we're 5 winners, 5 losers. Some days we're 4 winners, 6 losers, and have a great day. You say, how could that be? Because the 6 losers were maybe 5 or 6 points each, and the 4 winning trades were 20 points each. So we killed them for the day. You just have to be very disciplined, and that's hard. That's why intraday trading is just not for everybody. But it's the only way you can be successful long term. Great job, Stephen. So glad to hear that. Well done, my friend. And that explains it all. He nailed it all in a nutshell right there. 81 points, that's $1,600 per one contract. 5 losers, 6 winners, but the losers were 7 points apiece. The winning trades were 19.5. You can't do any. I don't know what anybody could. You can't ask for more than that. That's fantastic. That's good job, my friend. Edmund, which commodity is the least choppy? My opinion, watching it every single minute of the day for 16 years, the mini NASDAQ is the least choppy, which is why I show this in every single webinar for the past 15 years. I don't pick out the best one for the day. That's cherry picking. I don't want that done to me. You'll never see me do. That's why I don't do that. I feel the least choppy is the mini NASDAQ, and the second least choppy would be the mini Russell. Michael Z, I've been catching the long trades with limit orders at the 3-minute crosses. Pullbacks to the 3-minute. Yep, that's been great. Good job, my friend. Tuesday, I went over Tuesday's chart in detail, Thomas, on Tuesday's webinar. Is it? And yesterday and today, 2 really good days. Wednesday was okay too. And just, you can, all these webinars are on our YouTube page. Just go to YouTube and in the search bar, type in AbleSys. And I went over every trade on Tuesday, just like I did every Tuesday for the past 15 years, and every Thursday, like I'm doing right now, for many years. Tom, sometimes when transactioning to a new signal, the cross flickers. Yes, I've probably talked about that at least a couple of hundred times in the past few years. And when the price closes under the blue cross, like right here, it was flickering. But as soon as the price closes, which is why I continually point out where the bar closes in all my webinars, because it's a valid point. It's something you need to know. When the price closes under this blue cross, like it did right here, if it's flickering, you take the trade. If it goes back, you just get out of it. You get out with a small loss. So as long as the price closes under the blue cross, we'll short. The same way right here, it was flickering right there. As soon as and that's why you see the circles there. I went over this already, but I'll do this again for you. When the price closes above these red crosses, flickering or not, as long as you've got a blue cross, a 3-minute buy signal, you've got the 1-minute buy signal, the price closes above the 3-minute resistance point, you hit the button, you're in. That's how we handle that, sir. Mike Z says, tell everyone if they want to avoid losing, just keep attending the class. It worked for me. Thanks, Michael. Madhu, how do you set up a scan for stocks for swing trades? That's a conversation for another time, Madhu. Why don't you just call in and ask for tech support? They can walk you through that, because that would take me half an hour. And with 50 or 60 people in the room, I'm ready 15 minutes over. But you can't scan for a cross of the, by the way, you cannot scan for 2 time frames combined into one chart. That you can't do. You can only scan for the 1 time frame. So in other words, like on the swing trade, you can scan for a 130-minute signal, and then you just have to put it into a 130 daily guidance chart and make sure that the daily also agrees. There's no way to scan for everything. There's just too many calculations going on, and there's just no way to scan 10,000 stocks to find out which one would be coming up at that point. Michael Z made 85.25 points today and made some mistakes too. Great job, Michael Z. Man, Stephen and Michael killed them today. And I know they're in the oldies webinars for a long time now. So fantastic job, guys. I love hearing that. It's as good as making the money myself, and I mean that when I say it. Madhu, yeah, the 130 daily. Yes, sir. Just like I showed, I went over that part at the beginning of the webinar. I went into that detail. Excellent job, guys. Love hearing it. Kirk, to clarify, you're waiting for the first blue or red dot on the bar? No, you're waiting for the first cross to come in. Then you're waiting for the next red bar. The dot on the dot on the price bar doesn't mean a thing. It's just telling you it's the first. The big dot in the middle of the bar is just telling you it's the first red or blue bar. That's all it's telling you. It's telling you there's a trend change on the 1-minute chart. That's not good enough. We need to have the 1-minute and the 3-minute agree. So first look for the big cross, the big X, and then the very next blue bar, if you have a blue, like on here on the chart, as soon as you get the blue cross, now we get the blue bar. it closes. If it closes above the red X, that's perfect. If there's no red X there, there's nothing to think about. You just get in right away at the finish or the close of that 1 minute bar. That's all it is. It can't be simpler. I don't know how we could make it any easier than that. Blue 3-minute signal is a cross. Blue bar is a 1 minute signal. When that bar finishes or the open of the next bar, you're in. That's it. There's nothing else. There's no other, there's nothing else to know but that. And then, of course, the same way for a sell signal, you're waiting for the first red X, and then the very next red bar that closes red, you're in. Done. Nothing else you got to look for, nothing else to talk about. That's it. Pretty simple, right? When you think about it, it's like, oh, that's all it is. That's so easy. James, thanks, Ron. I always seem to learn something. You're welcome, Monty. Good job, sir. Kirk, you're welcome. Steve, good to see that the ticks are back. Yeah, I didn't, just so many people just getting confused by it. So you're welcome, Kirk. Good job, my friend. Aloha. Kirk's in Hawaii. Not a bad place to be. Thanks, everybody, for being here. I hope I was helpful. Stay safe now.